Hello, welcome to PSR, People Speaking Rail. And today, the People Speaking Rail will be myself, Mike Baudendistel, Head of Intermodal Solutions here at FreightWaves, and I'll be joined by Martin Liu, who's the CEO of Commtrex. Commtrex is a company that has a great deal of data in the railroad industry for things like railcar storage prices, railcar lease rates, a lot on transloading. You can tell us all about how you can connect to the right companies that can transload a shipment. So we'll learn from Martin in a few minutes. But first, I'm just going to go through take you around the FreightWaves.com website, talk a little bit about the news that's relevant to those that are interested in the railroad industry. I'm going to start with topic number one here, which is tentative agreement reached at the West Coast ports. We do have quite a bit of coverage up on FreightWaves.com, both from the Greg Miller article that we can bring up with the photo of ports of Los Angeles, and also there was a segment on FreightWaves Now where we had Greg and Sal Modigliano discuss what was happening at the ports of LA Long Beach. There you see Greg's article with the photo of the port of LA, and it's kind of what a difference a week makes. Sort of at this time last week, we were concerned about the labor situation. Maybe it had gotten incrementally worse because there were reports that the workers were effectively shutting down or severely impacting terminal operations from June 2nd to about June 5th. But it does look like a tentative new 6-year contract is in place. It is subject to ratification by both the dock workers, that's the ILWU, and the PMA, the Pacific Maritime Association. There had been a sticking point over wages, which seems to have been resolved. Those details were not made public, but it does seem like this should at least quell concerns for about 6 years, which is the length of the contract. So I think that's a positive thing for the railroad industry. Have a sonar chart that shows the port of Los Angeles, how the maritime import shipments have been volatile over the last few years. And Greg goes into this in his article that the volumes have increased seasonally. There you see the maritime import TEUs, Port of LA, how that really was at an extremely elevated level throughout 2021. 2022, it was during the first half of the year, to fall off in the second half of the year, and has remained with a great deal of capacity. Gene Soroka, who's the head of the Port of LA, says they're at about 70% capacity at the Port of LA. You do see that seasonal increase from sort of nadir in February through March and April and into May and June, how that's increased, but still lots of capacity there. So overall, good news at the West Coast ports. Sort of the next news story here is Tiger Cool Express is closing. Have a picture of Tiger's refrigerated intermodal containers that you can put up. So this is, if you're not familiar with Tiger Cool Express, they're a company that does 53-foot refrigerated containers. There you see the picture of the containers on flat car, and like that picture because you can see on the right of those containers, that's the cooling unit. So those would be temperature controlled containers, which we sort of thought of as being kind of the holy grail in intermodal. If you could figure out how to move lettuce and other produce via intermodal on a cooled unit, a lot of that's consumed in Chicago or New York, but certainly grown in California. So that was kind of an ambitious thing. This was something that was reported in Kansas City Business Journal. I believe Clarissa Hawes, the FreightWaves writer, is going to have a story up on that. She does tend to cover bankruptcies, when they come when they arise. And so it closed on Tuesday. The PE firm pulled the funding. They had about 50 to 60 employees. So I hope those individuals land on their feet. I'm going to go through one other news story here, which is one that was written by Joanna Marsh. Joanna has an article up on the rail unions urge Biden to keep current STB chairman at helm. So this STB chairman, Marty Oberman, for those who have heard him speak, he's been very tough on the rails. I would say tough but fair. Very concerned about the competitive dynamic in the railroad industry. Very concerned about rail service levels. And there had been a sort of surprising story that Joanna had written up a week or two ago, where there were three liberal groups, this Revolving Door Project, Roots Action, and Freedom Bloc, who said that the chairman mishandled the merger between Canadian Pacific and Kansas City Southern, and they wanted the chairman replaced by Robert Primus, the only member of the Surface Transportation Board that voted against the merger. And what Joanna wrote up in her article was that there was a pretty strong rebuke of that, where Greg Regan, president of the Transportation Trades Department of the AFL-CIO coalition, along with 13 different individual rail unions, sent letters to Biden in support of Marty Oberman, the current chairman. And do have a great quote that I'd like to bring up from Joanna's article. It was from the coalition of 13 rail unions. And it says the real problem with service and safety in the rail industry is not the concentration in the industry, but the hijacking of the industry by hedge funds and so-called activist investors. And it does seem like railroads focusing on service, that's kind of the reward that they get, sort of focusing on service over low operating ratio. Kind of the reward for that is activist investors kick out the management team. So that's sort of the issue in the industry that those unions call out. It's hard to disagree with that. One last news story is the JB Hunt. There's a JB Hunt update. Todd Maiden, who usually follows what's happening on Wall Street, did that at the Wells Fargo conference. Gave a couple of quotes from JB Hunt. Also have a chart that shows domestic containerized volume, which is really the primary segment that JB Hunt participates in, that JBI segment, although they do many other things dedicated, truckload, brokerage, all those things. But it shows domestic intermodal containerized loaded volume. Those white lines are averages of the quarter, sort of the first quarter date, sort of second quarter date, those two white lines. So it's increased just a little bit in the second quarter from the first. It actually increased a little bit more when you look at the green lines, which is 2022. But we're showing that domestic intermodal volume for the industry overall or actually down about 6.5% year over year in the second quarter to date, which is better than the overall intermodal volume, was down about 11% year to date. There were some quotes in Todd's article from Shelley Simpson, the president, who said that they have a few pockets where it's getting a little bit better. She's talking about demand. But sort of no wide scale sort of end to the down cycle as she was describing it. So said that the pricing pressure is still on for all modes except dedicated, which that seems to be a nice pocket of stability for a company like that. They say the prices will be different in the third quarter than they had been in the first half of the year. I guess their contracts started repricing in the third quarter of last year. So maybe not a surprise there. There's pricing pressure in intermodal. That's going to happen when intermodal volumes are as weak as they have been. So that's your news. We'd like to bring on today's guest, Martin Liu, CEO of Commtrex. Do we have Martin? There he is.
Hey, Martin. Good. Thank you for having me. Appreciate you having me on the show.
No problem. Yeah, good to see you again. I think the way we should start is just for those not familiar with Commtrex, why don't you give us a rundown of the services Commtrex offers?
Yeah, absolutely. So Commtrex is a platform that connects shippers with various rail services and rail providers that will help them effectively facilitate their move of shipments. So we have 4 marketplaces. We have a marketplace for leasing rail cars, a marketplace for rail car storage, a marketplace for buying and selling rail cars. And then on the marketplace that we built last was a transload marketplace, which helps connect shippers with over 1,700 transload facilities across U.S., Canada, and Mexico. We also have a rail services director, which also provides shippers with insight onto where they can find rail car maintenance shops, industrial development providers, and other providers that can help them with setting up their facility or setting up their program. In addition to that, we also have a physical logistics program that we've recently launched that can also help shippers with managing, strategizing, and then also providing exception management for the disruptions that happen along the way.
Yeah, so great deal of things that help shippers with their. I guess if there's one commonality there, it helps shippers with their railroad needs and connecting them to the right service providers across a wide range of services. So you're almost like a broker of railroad services.
Yeah, we're more of a, I would consider more of a visibility digital platform with
Mhm.
respect to how we connect shippers with the different sources across the North America. I was a former shipper myself. I was on the trading desk at JP Morgan. We're moving coal, so we were coal environmental markets were the products that we were trading. And when you're moving a high volume of product, and you're on a trading desk where arbitrage opportunities are very timely. Being able to identify the right sources, get the rates, and understand where capacity availability is paramount to being able to execute and put on trades. And for us at the time, it was very difficult, back in 2015, 16, when we started Commtrex, and right prior to then when I was on the trading desk, to be able to assess whether a trade from origin to destination would work. And obviously, delivered cost is the most important component to any position that we're putting on. So when thinking about rail cars and rail car assets, the first thing that came to mind was how can we create a spot market for rail car capacity? There are people who are going to be long cars and short cars, and if there's some way for a platform to create some equilibrium between the supply and demand side of the market, that should be something that would be very valuable for shippers. So that's where we started. Actually, we started in the leasing market, and then we moved into the storage market because we knew that in a bear market, storage would be on fire. And that was proven and very demonstrative during COVID because at that time there was a peak amount of about 525,000 cars that were in storage. So 525,000 of the 1.6 million rail cars across North America were sitting in storage. Relative to now, where you're sitting at about 295,000 cars in storage. So in a bear market, storage is available. But either way, if you're a shipping rail, whether you're managing your own cars or using system cars, you still have to figure out how to identify storage locations, identify capacity available for rail cars, and then most recently we launched a transload platform because that was something that we saw in data analytics that shippers were constantly looking for ways to be able to identify terminals, ports, transload sites across U.S., Canada, and Mexico, so that they can convert some of these truck lanes to rail lanes. And even to this day, that's probably one of the largest blind spots in the supply chain.
Yeah, so you're really addressing a lot of different problems here. I mean, I guess one thing that's interesting is with the railcar leasing market, from an outsider's perspective, I mean, there's really not a lot of visibility into lease rates. I mean, you can sort of, I mean, when I was covering, GATX and Trinity, it was hard to sort of ascertain sometimes, outside sort of data on lease rates. So maybe, what are you seeing in the leasing market from rates, currently?
So, I'll start higher level before we get to the rates. Just on a more macro level, we've been in a fairly tight environment for rail equipment for quite a while. The issue that a lot of shippers are facing right now is exactly how do they manage their capacity moving forward in a very unpredictable and uncertain economic environment. When thinking about rail car fleet management and when thinking about how you balance your fleet, there's a lot of sort of predictive analytics that go into how you determine what your capacity needs are going to be. And that ties directly into what the supply demand is currently. And then also looking at every segment, right? So whether you're looking at dry bulk cars or we're looking at liquid bulk cars, every segment, even within those categories, are going to be different. So, when you talk about lease rates, it's really, on the carload side of the business, it's very sort of commodity contingent or commodity dependent. So depending upon whether you're looking at, large covered hoppers, which is the largest fleet in North America, whether you're looking at tank cars, even within those specific segments, really the few dynamics or dimensions that go into a decision that a shipper's making is, what is the equipment, the unloading or discharge type of equipment needed to be able to unload that particular commodity or product, and then number two, what's the cubic capacity for that product. So when looking at lease rates, and we had a lease index, and we keep internal lease index here internally, but we had a published lease index about 3 or 4 years ago, and the value to that index was really, giving more of a 30 to 40,000 foot level view of what prices are. But because cars are very specific to, the two, primary subtopics I mentioned or subcategories, which is the discharge type and then the cubic weight capacity, and then within that respective commodity, it is pretty fragmented in pricing. And so right now, we've seen pricing, on the higher end than what we've seen, historically because of the tightness in the market. And right now, shippers are reluctant to get into long-term agreements because, we're coming out of a pandemic, which is a black swan event. And who knows what with the geopolitical risk that is out there, what is that next black swan or outlier event that's going to happen that may disrupt the ability for shippers to be able to move products. So, what we're seeing right now is a lot of shippers have been looking for cars. Right now, lessors on the supply side of that, they're reluctant to get into short-term deals. Of course, if you're a lessor and you're thinking the supply side, you want to be able to price cars out as far as possible so that you can lock in term rates and not be so sort of dependent upon what the spot market's doing. So that's what we tried to create when we were building Commtrex. Is we were really trying to develop a spot market, but what the impediment was to creating a spot market was the fact that you need some fungibility and some liquidity in a spot market, whether it be equipment or whether it be underlying commodities. And it's just, equipment, rail car equipment is not that fungible to where you can have a liquid spot market.
Yeah, that makes a lot of sense. I mean, it's so specific to the type of chemicals that's being moved. If it's a tank car, if it's a coils, insulation, has the right jackets, has the right safety requirements, all of those things. But, it seems like going through you sort of puts you on an even playing field with a big leasing company. A big leasing company is going to see sort of every single day, are these leases being renewed? Whereas a shipper just wouldn't have that sort of visibility unless you're going through someone like you who's knowledgeable in the space. One thing that was interesting, when we used to have some of your data in Sonar, and we had railcar storage rates at different regions in the country, and it was always interesting to me how sometimes there were higher storage rates in some regions than in others. Are you seeing any disparities now, or is it just there's enough demand, at least on the carload side, that storage rates aren't all that high?
Yeah, so when you think about storage, think about storage as really a region or a geographic driven market. So there's a few components when you're thinking about storage. Number one, are you talking about hazmat cars or non-hazmat cars? Because that, if you're talking hazmat cars, that really relegates you to a much more sort of a constrained amount of capacity you can choose from. If you're talking non-haz, much broader amount of capacity you can work from. And then whether the cars are loaded or unloaded. Those are, your two primary categories of dynamics when you think about pricing. But at the end of the day, everything is geographically driven, right? So the highest priced market, even historically since we started the marketplace, has always been the Houston market and the Chicago market. Why is it the highest price? Because you're constrained by geography. There's just not that much available rail track capacity. So just basic laws of fundamentals of supply and demand. You don't have the available track capacity. Everybody wants to be as close to the ports or terminals or wherever they're unloading their product or whether they're discharging their product at. And everybody wants to be in the Houston market. So when you're thinking rates, people come into our platform and they think that, what the rates they'll see in the Midwest or, in the interior of the country, your $2 to $4 per car per day and your $100 to $200 in and out fees. They're surprised when they come to the Houston market, and you're talking, very often low to mid teens, and in a hot market, you're talking in the 20s as far as per car per day prices, and $250 to $300 on the in and out prices. So, when it's a very stratified market, but it doesn't fluctuate that much when you're talking about constrained markets, constrained for capacity markets like Houston, Chicago, Los Angeles. So we always advise our shippers that when thinking about capacity, you try to find capacity that is as close to where you want to be, but you need flexibility. So along your origin destination points, you want to be able to have as many contracts as possible. And that's what the platform really sort of provides for our shippers is, you come to one place, you can get one contract and be able to determine, based upon your origin destination points, but based upon the freight rates that you have, along those points, what are the short lines or storage providers that can provide you with the best rates? But at the end of the day, everything is really confined to the OD pair or the rates that you have with the Class 1 railroad.
Mm-hmm. Yeah, a lot goes into those rates. That's a great description. I also want to ask you. I mean, you do so much with transloading, and sort of what are the different types of transloading that you help facilitate, and how can a shipper use your platform for transloading?
Yeah, absolutely. So I'll back up 1 second. So when we were building the transload marketplace, there were two things that we really kept in mind. Number one was how do we make it easier for shippers to find transload facilities and locations? When you think about transloading can be everything from a very mature and built out infrastructure capacity, like what you would see at a Long Beach port, what you'd see in Charleston, Savannah, Houston, or even in Newark, New Jersey. And it could all the way swing to the other side of the spectrum, which could be a Teams track, which is, effectively a track with a crane and a truck that's unloading product out of a car, and it's almost kind of a makeshift, temporary sort of type of transload situation. So very broad spectrum as far as the different types of transloading that exist. But when thinking about, so that's aspect number one is really helping shippers identify where they can find transloading. Aspect number two is what type of services or functionality features do the transloading facility provide? Who are they served by? Who are the local carriers? What hours do they serve? What type of security features do they have? There's a lot of detail that goes into a shipper's decision as to what type of transload facility to choose. And why is that important? The reason why that's important because one of the largest blind spots within the supply chain is at origin and at destination of unloading and loading. So number one, that's a huge blind spot. So there's not a lot of visibility once you get to the origin destination. And number two, when you think about exposure of the product, particularly an underlying commodity product in merchandise or carload business, when that product is being loaded or unloaded, that's when there's the most potential liability or risk for there to be something that goes wrong with the product, right? So that is the second component of it is who do you know as far as transfer facilities, what do they do? And then, how qualified are they? What's their safety record? What are all the different parameters that go into making a decision? And that's a really, really important decision for a shipper to make because that's where the exposure is for the product when they're loading and unloading the product is right at the origin and destination, not along the journey when it's in a rail car or in a container. It's really at origin and destination.
Mm-hmm. Yeah, that makes a lot of sense. I guess sort of related to that, the transloading to a large extent is related to the sort of potential that everyone wants of sort of taking trucks off the road, moving those to the railroad. That's good for the environment. It's good for highway safety, et cetera. Good for fuel usage. So sort of how do you see shippers sort of managing that and converting from truckload into rail? Where has there been growth and where is sort of maybe the service just not strong enough to do that?
Yeah, so right now, I'd say about a third of the shippers that use our platform have never moved freight by rail. And right now, there's a few major tailwinds that the railroad industry has. Number one is sustainability. Shippers want to effectively figure out how they can create a more sustainable footprint, a carbon footprint. So when thinking about converting those truck lanes to rail lanes, shippers are really trying to understand exactly how do they do that. Rail is a complicated product sometimes for shippers to manage, right? So there's a lot more decisions that go into effectively incorporating a rail program into your transportation supply chain strategy. And when shippers are thinking about transloading in particular, they're thinking about how do I get a rail rate? Do I need rail cars? Am I going to manage my service myself? Am I going to outsource this service myself? And then when thinking about the actual sort of management and the visibility itself, a lot of shippers don't realize that the visibility that is available, through trucking is not as readily available on rail. And that's one of the problems that we're trying to solve here at Commtrex is how do we provide more visibility? So, step one for us was creating the marketplace so that we can provide that connectivity and that sort of visibility into where the locations are and what the locations do. And sort of step two, and this is what we're working on now, is how do you provide that visibility and how do you provide the physical logistics support and services for the shippers? Because at the end of the day, when you think about the generational shift that's happening, you're never going to see a 15 to 20 year fleet manager again, right? So when you're thinking shippers and how they're managing their logistics, historically, shippers have always sort of insourced rail and they've outsourced their ocean freight, they've outsourced their trucking. Even to some extent, they outsourced their barging, but rail has historically been insourced. So now that you have this generational shift where you have a lot less people who have the experience, now shippers are trying to figure out, do I keep this program insourced or do I outsource it? And if they outsource it, you're talking about on the carload side, not on the container side of the business, you're talking about 10,000 plus stick codes that move by rail. So there's a lot more variables that go into the process. And if you're a logistics manager, if you're sitting in a seat where your responsibility is to ensure that the underlying product that you're moving or that you're selling is going to make sure that it doesn't get disrupted, before you pull the trigger and saying we're going to move, a third, a quarter of our capacity from truck over to rail, you better understand exactly what that means. Not only to the rates, because the rates obviously that's an important component of it, but also just the management, the maintenance of it, the exception management that will happen, and the disruptions that will happen along the way. There are blind spots that are out there, and what we're trying to do is provide that visibility so that shippers don't have to worry about it. They can have a co-pilot that's there with them, through a visibility platform with Commtrex, through a marketplace, and then through physical logistics exception management, which we've been building out over the past year and a half.
Mhm. So you mentioned at the origin and destination, there's blind spots where the shipper doesn't know how long it's going to take to get it loaded on the train, get it unloaded from the train. It's going to be stuck in a yard, et cetera. Are there any other sort of blind spots that sort of regularly arise?
Yeah, so the blind spots it's typically not along the journey, right? So there are EDIs that can take care of what's happening along that journey from origin and destination. Really, it's sort of on dock and off dock. Really, it's within you get so it's once you get to origin destination, and then also within the fence. So within that yard. That's another major blind spot. What is happening with that product once it's in the yard? So if you're talking a commodity, a bulk commodity that's stored outdoors, where is it? Where is it unloaded? When is it unloading? If you're talking about a product that's moving, in and out of indoor storage, you really want to understand, at some point, if you're a shipper, you want to have that real-time visibility into, where and when and what is happening to my product within the fence. So it's one thing to be able to have a visibility at origin and destination once it gets there, but it's another thing to have visibility within the fence and within the yard. Because if you're a product manager and you are responsible for making sure that your product gets to your customer quickly, if there's a disruption that's within the fence, within the yard, the first thing you want to do is you want to be able to know that so that you can get boots in the ground to figure that out. And most importantly, even if you couldn't do anything, information is key. And you want to be able to have that information so that you can go to your customer and let the customer know that, hey, that ETA that we initially had, that's going to be postponed. Because at the end of the day, I think the fleet managers and the logistics people, the responsibility, as much as you have in your control, there's a lot that's out of your control. But what is in your control is data and information, and being able to have that real-time information and be able to pass it along to your downstream customer is probably paramount. So that's paramount number one, and paramount number two is being able to control costs. The last thing a finance department is what they want is a surprise accessorials or demurrage fees. And detention, demurrage, accessorial fees, those are fees that can get out of hand very, very quickly if you don't have ways to be able to visibly monitor it, and you have ways to be able to intervene and manage those disruptions.
Yeah, there's one big CPG company we interact with all the time, and that was their big issue with the rail was the demurrage fees. So yeah, definitely seems like you're sort of addressing the issues that people care about there. We're out of time, but where can people reach out to you, Martin, and learn about Commtrex?
Absolutely. If they go to commtrex.com, that's commtrex.com. You can follow us on LinkedIn, and then we also have a weekly newsletter that goes out to shippers and to the industry that also provides information and data analytics for what we're seeing within our platform.
Yeah, there's a wealth of information on that website. I would encourage people to read it regularly. Post good stuff from Tony Hatch, good stuff from yourselves. So be sure to do that. So thanks very much. I hope everyone has a great day.